Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, and when you tune into my show, you're going to hear about topics that are important to the home business community. All right, so let's talk about these taxes. So I've gotten a lot of questions over the past couple weeks, really talking about, I guess there's some confusion about exactly what kind of taxes have to be paid. And so, and especially when, still we're talking about Jeff Bezos, we're talking about Donald Trump and not paying these taxes. So, so I want to talk about really what kind of taxes business owners pay so that you have an understanding of what you're supposed to do or what you got going on. Now, this list, let me say that this list does not apply to everyone. There will be some of you that have these taxes and some of you that do not, all right? And I'll try to make sure I explain that in every one. Now, with business taxes, let me start out by saying this. People want to say, well, Lysandra, I want you to file my business taxes, but not my personal taxes. The only structure that has its own business taxes that has to be paid is a corporation, okay? And the only other business structures that file information returns, those are your S corps and your partnerships. Again, those are information returns. The S corp and the partnership does not pay federal taxes. Okay, C corps pay federal taxes. Partnerships and S corps do not pay federal taxes unless you're getting penalized for something. Then it's a penalty. It's not a tax. And then the profits and losses are passed through to the personal return and claimed on the personal return. Okay. So I hope that makes sense to you. So if you've got your single member LLC, you do not have a business return to file. It is a part of your personal return. Okay. All right. So tax number one is the income tax. Now, this is something that everybody pays, right? Because your income tax is based on the amount of income in your household. If you're married, filing joint, and you've got two working spouses, if you are a single person and you have a side hustle and a job, or you got two jobs, what all of your household income is taken into account here. And that's what you pay income tax on. You have your income that comes in, and this is also, like I said, your wages. You can have profit or loss from a business. And then you have your deductions and tax credits and stuff. And then that's when you get to your adjusted gross income, blah, blah, blah. That's where you pay your income tax. So everybody pays an income tax, okay? That's number one. Number two, self-employment tax. Now, this is separate from your income tax. It is very possible to have zero income tax due, and then you have self-employment tax. Now, for my home business owners, for my self-employed people, my 1099 people, however you want to call that, if you have a profit in your business, then you will have self-employment tax. That's 15.3%. Now, that goes towards your Social Security and Medicare. Just like when you have a W-2 job, you have your federal income tax withheld, as well as your Social Security and Medicare. That's what self-employment tax is. That goes to your Social Security and Medicare, okay? So that's self-employment tax, again, different from income tax. So where people get a little confused is that it's also possible to have income tax due as well as self-employment tax due, and those two get added together for your final tax. Now, so with that, when you have a tax liability of $1,000 or more, you will then have estimated tax payments. We have a pay-as-you-go system for our taxes, right? And so when you're self-employed, if you're strictly self-employed, you don't have anybody withholding tax for you. That is what that 15.3% goes to, okay? And also your income tax. So your estimated tax payments is paying towards that. All right. So that come the end of the year, you're not really dealing with an underpayment penalty. Now, your self-employment tax, not your self-employment tax, I'm sorry, your estimated taxes are due, they say quarterly, but it's not really quarterly, right? Because their payments are due in April, June, September, and then January of the following year. All right. So this is why I tell you, especially as business owners, to make sure you reserve that 30% of your income for taxes, because when you have estimated tax payments, you're going to be writing a lot of checks the first 6 months of the year, and you want to have that money available. All right. So yeah, you can have estimated tax payments that are going towards your overall income tax. All right. Number 3, payroll tax. The only way you have payroll tax is if you have employees. Now, if you are a sole proprietor or a single member LLC, you can have employees, but you, the owner, are not one of them. Okay? What you pay yourself is called an owner's draw. So when you have employees, then you have employment taxes that you withhold from your employees. Then you put your part in, and then you give that to the government. Now, that's what you hear about when people want to file quarterlies. That's what quarterly filing is. That is for payroll taxes. That is not estimated tax payments. Do not confuse the two. Estimated tax payments, you go on irs.gov and you pay that. They will take your money anytime, okay? But your quarterly employment taxes, that is actually a filing that has to be done. Not just paying. Your employment taxes are paid monthly, and depending on the amount of employment tax you have, the government can come back and say, hey, we need to see some money from you twice a month, okay? Or whatever. So the government can change that up depending on the amount of employment tax that you have. But you have a quarterly filing for your employment tax, and then you have an overall annual filing for your employment tax. So again, it's not to be confused with the estimated tax payments where you just go pay towards your income tax, okay? Two different things. The next one is sales tax. This has become a really big deal since the Wayfair decision, June 21st, 2018, okay? So if you are, especially for my e-commerce squad selling stuff online, listen, sales tax is really a big deal for you because now the laws are changing. States are still formulating their laws to say, hey, what are we going to charge people who sell stuff in our state that don't live here? All right. So the states determine when you pay your sales tax, when you file your sales tax. Every state has something different. This is why I tell y'all to outsource this stuff. You don't have this kind of time in your business, all right? So the sales tax is a percentage of a sale that you as the seller collect from the customer, and then that gets paid to the state or location, where you live, but also where you sell to. Like I said, they still working this stuff out. So this is why I say outsource that stuff. All right. But like I said, the states determine when you pay, like how often you pay, and also when you file. All right. Every 50 different states, 50 different sets of rules. They trying though. Okay. Number 5 is a franchise tax. Now, not all states have franchise taxes. I don't even know how many right now, but some of them do, some of them don't. So the franchise tax is a state level tax that the state levies against businesses, and that can be based on the net worth of the business. It can be a flat fee. It could be based on gross receipts. Again, different states, different laws. All right. You just got to know the laws of the state where you're doing business. Now, this can also be levied against businesses that are formed out of state, but do business within the state. This is what we talk about. What's it called? Being a foreign agent. Okay. So when you are, let's say, I have my business here in Virginia and I want to go do business in, Maryland, I may have to register as a foreign entity in the state of Maryland, and they can also charge me tax there for the privilege of operating in their state. Okay. Listen, these taxes is for real. All right. And then the last one I want to talk about is an excise tax. Again, this is something not everyone has. This is where we're talking about your air transportation taxes, fuel taxes. Usually owner-operators tend to have the excise tax where other people don't. But it also depends on if you manufacture stuff and how it's done. It can be an environmental tax. There's a lot of taxes that can fall under that excise tax thing, okay? So like I said, not every business will have all of these taxes, but you better know which ones you have to pay, right? Because when you don't, and then your states find out about it, they're going to come for you. And when I tell you the state, and people talk about, like the difference between state and federal enforcement. The state is more like a piranha where, feds is kind of like Jaws. Jaws, you hear the music, you don't see the shark for another half hour. Piranhas is on you like this, okay? So the states come for you faster than the feds do and with a lot more teeth. So you definitely want to make sure that you satisfy your state requirements. If you got a choice, okay, if you got to make a choice, then you want to satisfy your state requirements and then work something out with the feds, because the state is where you live and they will come for you. So when it comes down to paying these taxes, okay, this is the cost of doing business. Okay. And I know you see those headlines and, you see these big corporations, oh, so-and-so didn't pay any federal tax. But see, you don't take into account the state taxes that are being charged, the employment taxes that are being paid. They're paying taxes somewhere. So even though there may be some federal tax laws that allows people to not pay taxes on X amount of dollars, whatever, those same things apply to you. And, a lot of, like I said, people call me talking about Jeff Bezos. Jeff Bezos lost money for 20 years with Amazon, okay? And it's tax laws that allow him to not owe federal taxes at this time. And so we're still going to be hearing that same headline in 2020, okay, about how much money he made and then he didn't have to pay any federal taxes. But there's all these other taxes and other hidden costs that people are not talking about when it comes to running a business, okay? Again, it's just the cost of doing business. So, like I said, not everything that I covered here will apply to every business, but you better know which ones do apply to you and stay in compliance. So if you don't know, you can schedule a consult with me. You can schedule a consult with your own tax professional to make sure that you are in compliance, because once you step out of compliance, then you basically require state and federal agencies to enforce the law. And part of that enforcing the law can be shutting your business down completely. Okay, that's the extreme end, but it is what it is. Okay, so guys, thank you so much for tuning in to Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here, schedule a consult to get your business questions answered. All right, have a great day, and I will see you all next time. Bye.